Hey everybody, we are going to talk about EV stocks today, and not just I always I get comments because I say I'm going to talk about EV stocks, and then I launch into GM or one of those, and people tell me that's not a real EV stock. So to set me
Not
straight,
yet.
to make sure I pitch some actual EV stocks, John Rosevear is joining me. He is Fool.com's automotive expert. Before we dive in, please take a minute and check out Fool.com/Franco, the link you see on your screen. Get the top 10 stocks to buy right now from the Motley Fool. The best way to support this work we're doing on YouTube, again, fool.com/Frankel. John, let's go ahead and pivot because I know you wanted to talk about one of the few EV manufacturers that has had a lot of success that I'm not terribly familiar with yet. Um, I know Tesla very well. I have a very love-hate relationship because I sold the stock too early. I know GM and Ford obviously very well. I know BYD I know very well. Rivian is one that I see their vehicles all the time. Um, it, it,
I do
it,
too.
I'm in South Carolina. There's not a place to buy Rivian vehicles anywhere near me, which is what kind of impresses me about that. There's a reason that you don't see that many Teslas down here, or you don't see very many Lucids down here. It's because there's the nearest Lucid showroom is in Atlanta, which is a 3.5 hour drive away. Um, but the fact that there's no Rivian place anywhere around here, but I'm seeing their trucks constantly, is that's made me kind of take notice. So where does Rivian stand in the whole EV race, profitability wise, sustainability, and things like that?
Let me back up. And so I've been watching the auto industry for years and years, and I've been watching a lot of these startups since even before the SPAC boom. Companies like Lucid, when they had one prototype and a great idea, and they were looking for capital. Companies like Rivian, where they had one prototype, and RJ Scaringe and Ford made an investment early on because they believed in RJ and so forth. The way I think of them now, especially, is what is the path to profitability, and do they have the cash to get there? You know, and there's some subjective analysis involved in both. Is it realistic that they will hit their milestones on the way to the path to profitability? Will things come up that make them burn more cash than we currently expect between here and there, that they'll have to do a raise? Maybe they have to do a raise under difficult economic conditions, whatever, those kinds of things. Well, Rivian right now says it has the cash to get through the launch of their midsize, higher volume vehicle, the R2, which will follow on the bigger ones they've had. This is a vehicle that's expected to start around $45,000. We'll see if that holds in 2026. But they're looking at 2026 for the launch of that vehicle, and they are on path to it. They have done a lot of work around costs inside the building right now. I think one of the things people don't know about Rivian right now is that if you're familiar with Rivian, you know they have these two mainstay models, consumer models, the R1S, which is the SUV, and the R1T, which is the pickup, was the initial Rivian. They also build the vans for Amazon, but we'll get back to those. They just completely redid under the skin a lot of the architecture of the R1S and the R1T. It was something like removing 1.6 miles of wiring harness per vehicle. They went from 17 in-house ECUs, electronic control units, chips basically, to 7. This took a lot of costs out. And in fact, I have the number: 20% of the parts cost removed. And by simplifying parts, physical parts that make up the vehicle, they've got a 30% improvement in production line rate by the end of this year. They're going to be able to make more on the same tooling with the same people, just run it faster because it's simpler to build now. And yet they are still the R1 and the R1S and R1T that people love, just incrementally improved with more range and new motors and so forth. All their motors are built in-house now, so that's another supply dependency that they've taken out. So the architecture, the electrical architecture with those ECUs and the wiring and everything like that, that is a step toward what they're going to do on the midsize vehicle. And then on top of all of that they've done this year, reducing costs that will come down significantly. I mean, they're coming down now. The numbers I quoted were once we're fully up to speed at the end of 2024 kind of deal. These costs will be lower. They've also struck a deal with Volkswagen. where Volkswagen is going to license that electrical architecture, those chips, and some other the software that goes with some other bits of Rivian technology, as developed for the R2, the next generation vehicle that's going to launch in 2026. That's a $5 billion deal, a billion of which they apparently have in hand shortly, and the rest will come. They're setting up a joint venture, and then the payments come as milestones are hit, and so forth. That gets them to 2028 on cash. That gets them through, I think, it's at least 2027. It's past the point of ramping up and launching the R2, the higher volume product. They do expect, just from those changes to the R1 vehicles, the existing products, to be gross margin positive by the end of this year, and then certainly into 2025. Now, gross margin is a long way from the bottom line, but it's still, it means that the vehicles cost less to build than they can sell them for, just in terms of the parts and labor that go into the vehicles. Never mind marketing, R&D, and all those other costs are separate. But that is a significant landmark, a significant milestone on their path. Again, if we're looking at this, are they going to make it or not? Well, they have a great brand. They have popular products. They're expecting to produce 57,000 vehicles this year, more next year. And remember, these are vehicles that go out the door at $80,000 or more. These are not cheap vehicles. The Rivians are, I've always affectionately, Rivian folks affectionately referred to them as Patagonia trucks. It's an upscale lifestyle truck. These aren't, gritty, dirty F-150s. They do get dirty, but that's because people take them out in the woods and camp with them and, run rocks with them and so forth. They're for that. They're for those people at this price point. The R2 plans to bring that experience into a lower price point with somewhat smaller vehicles. Now, I sat in the R2 prototype, and it's a Rivian inside. It's got all the tech. It's got the great interior. It's just a little smaller than an R1S, and it'll be less expensive for them to build. That's the vehicle. If that vehicle can get that is the vehicle they're expecting to take them to profitability. Because they're expecting significant volumes. I think the odds of that look really good. And the fact that they now, thanks to the Volkswagen deal, have the cash to get there and beyond it, makes it look like a nice bet. And once Rivian's profitable, it's a whole different ballgame in terms of the valuation of the stock.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.